of all, just want to set the scene. Talk to us a little bit about the peak to trough declines. Now, we've seen an NVIDIA, 15%, it's down 6% today. The rest of big cap tech is down, I think, $1 trillion in market cap the past couple of weeks. What's going on here?
It's the white knuckles that started last week, as Steve talked about, in terms of Tesla, Alphabet on CapEx. But in my opinion, this is the week. When we end the week, we're going to look back and say the AI revolution, the monetization started. So I believe if I look at all of our checks, what we're seeing from Microsoft, from Amazon, across software, ServiceNow, Palantir, and others, this is the prove me moment for big tech. And that's why I expect gold medal performance from big tech playing out this week. And if you look at the last 18 months, this whole bull market, skepticism, haters have hated it as we've gone up. This is just another speed bump on what I view is a tech bull market that continues for the next few years. And this will be, I think, a pivotal historical week for big tech, starting tonight with Redmond and Nadella.
Talk to us about Microsoft, which is a stock you follow, and then we'll turn to you, Rob, in just a moment. What are you expecting there, and what would be the red flag moment?
Sure. I think we're going to see upside in Azure from a cloud perspective, intelligent cloud. That's really the source of the upside. PCs and a lot of those other, I think that's really background noise here. I would actually expect not conservatism, but actually pretty positive sort of outlook going into next year about uptick from a Copilot perspective, what we're seeing in demand. Then you talk about red flag. Well, CapEx is going to continue to expand. That is, to me, that is the right strategy. We are in an AI arms race. That's what Microsoft, that's what Alphabet needs to do. If there was a red flag, they say something about, is there some sort of pause or hesitation in customers going toward Copilot and AI? All of our checks, and we around the world, we do not see that. I think this is a validation moment, and I think it sends the bears back into hibernation mode.
Rob, that's a perfect place to pick up on this. I do think that's the big question. If it's all just about spend and ultimately kind of the supply side cost of things, okay, fine. If there's any sign that demand is weak, because, for instance, Copilot, well, it's just not delivering as much for CIOs as they might like, that's a much different story. Anything you can add there?
Yeah, well, I can't speak to the Microsoft side of it on Copilot, but I would say that the monetization gains from AI at Meta, as for instance, have been ongoing. Like this is, they've been doing some really important work on their core AI. It's been driving monetization. They've been able to run much bigger algorithms because of the transition to GPU compute. It's leading to much better content matching, better ad targeting. It's also helping them with campaign automation through things like Advantage Plus. So, it's the strategic Gen AI portion of their spend, which is still up in the air and probably, several quarters at a minimum away from any signs of monetization on that. But I would, sort of echo some of the comments that Dan was making on monetization for at least for social media and Meta and ad tech. It's already happening with pretty large degree. I mean, this is the cause of the major revaluation and acceleration in Meta over the past year and a half.